Hi, this is Daniela Cambone for StansberryInvestor.com, and welcome back to our summer series. We have brought back some of our all-time fan favorites for a yearly touch base here. So please welcome back to the show, Professor of Organic Chemistry over at Cornell University, Dave Collum. Dave, always good to have you on. Good to see you.
It's a pleasure to be here. My connections with Stansberry go back probably a dozen years now.
Wow. Well, this is only our second time speaking. The last time we spoke was during our Outlook. You were at a crossroads in what to do with your cash. I know in 2020, Exxon had been booted out of the Dow, and you had seen that as the bottom for energy, and you were looking at places to park your cash. Where are you at today?
Crossroads.
All right.
Yeah, it's a big crossroads. It's kind of a roundabout. I'm still laboring, so I haven't made huge commitment to parking my cash anywhere different. It feels like the market's kind of shaking a little bit. There's a little bit of a vibration going on in there, so I'm not rushing to go longer of anything. If you look at valuation models and you look at the valuation of the 10 deciles of valuation, which is a Hussman concept. You can obsess over the most overvalued stocks and say, how are they doing relative to their past? And they're, as you know, profoundly overvalued. And so they're likely to bring the market to its knees at some point. The problem is that the deep value stocks, the ones that are, for use a trite phrase, low PE stocks, they are at their all-time high too. And so I remind readers or listeners that let's say the market cut to a PE of 7. Again, I hate the term PE because it's like a gaggle of lies in that, but I'm going to use it as a generic for valuation. If the PE 7, half the stocks in the market are under 7. And so if you think you're sitting on a stock that's cheap because it's 12 or 15 or something, and you feel comfortable with that, are you going to be okay when it's got a PE of 5?
So Dave, do you think that price discovery in the market is broken?
Totally. I think it's totally broken. I think I wish I understood why it was so broken. The bond market's no longer a market, in my opinion, and the bond market is the 500-pound gorilla. So if you've got a profoundly mispriced bond market, then it seems as though that is the countdown clock and loss, the blinking number, red LED that's counting down to some Armageddon Valley of Death moment. And the Fed keeps saying, we just need more data. And I think the Fed has woven a terrible, terrible storyline here that at some point they're gonna eat it. And I don't know when. There's people who say, you've been saying this for 10 years. I go, yeah, the market's actually been overvalued relative to historical valuations since 94. Right? So they say, well, maybe we need new numbers, right? Maybe that's not the case. But what's interesting, there's some correlations. That is, the leverage in the market soared at precisely that same time. And so if you actually look at leverage relative to other metrics, leverage took off in 94 and never looked back. And so the market took off in 94 and never looked back. And so will it just stay levered? I don't know. Right now, the market's priced to return collectively about 2% a year if you take growth out. It's just a terrible price.
Do you think, is that part of the reason the Fed is hesitant to raise interest rates? Because what happens when rates do go up?
Well, if rates go up in earnest, right? If they go up, I like to ask people, if you had to buy a 30-year bond and you of course don't know the future, you're guaranteed to be paid. And the one thing you can't do is hedge it. Everyone always says, well, you don't buy a bond, hold it for 30 years. I say, well, someone does, right? So the fact that you're a bond trader on crystal meth doesn't interest me. The fact is we're putting out 30-year bonds, are turning in the 2s now, I think, and maybe it's 3. I don't know. I can't keep track. What would you demand on a 30-year bond if you were just going to buy it and put it away? And the answer is not 3. And the answer for most people, they start thinking about the risks of inflation. They go 7, 10, 12, I don't know what. But 30 years from now, it's virtually guaranteed that if you've been holding a 3% return, you're toast. So therefore the bond market's not priced correctly. It's not priced as a source of revenue. It's a trading vehicle. There's some maxim, Goodhart's law or something. I can't remember all the laws. It says that as soon as a benchmark becomes a target of investors' interest, it no longer serves as a benchmark.
There's just this feeling that, at least to me, Dave, that everything is broken. If you can't count on the bond market anymore, if the S&P, like you said, overvalued, not a true reflection of the economy. Has the system broken? Is there loss of faith in the system? Are we there yet? What point in the cycle are we at?
I don't know what point. I'm not going to use an inning, the 8th inning. We're in overtime. Here's an S&P concept that I've been thinking a lot about, and I've never told anyone, almost like I want to keep it in my hip pocket. Maybe it's not profound enough to do that, but the S&P has done, I was calling it a leverage buyout, but they didn't buy anything out. It was a bear raid on middle America and on non-indexed companies. So if you look at what happened, for example, in 2020, the S&P benefits because companies like Chipotle and McDonald's and big retailers are scooping up all the business of the destroyed economy. And so if you look at the S&P and you look at earnings and use that as your benchmark of the economy, you're failing to recognize that it's also it's consuming the economy. And so even more pedestrian examples, like when, used to be you'd start companies and they'd grow and do whatever. Now S&P based companies buy them. So with huge leverage, Pfizer's bringing biotech companies into their portfolio. And so the S&P is also providing a misleading metric of our well-being as an economy because it's becoming a higher and higher proportion of our economy. And the various diners and retail small business owners are gone, and the S&P is taking whatever business they have, they're taking it. And so maybe that's the natural order, but it also means therefore that it's kind of propping the S&P, and it's making people feel like the economy's. How many people talk about the economy burning hot? Don't tell the person who just put up with a year of no income the economy's burning hot. It's not burning hot.
Exactly.
The S&P is burning hot.
Exactly. And to that point is like, where does the truth lay then, Dave?
Well, so what it means, therefore, is the S&P could actually keep going up based on that. That's a positive force for the S&P's pricing if you ignore debt. So if they're using debt to buy up assets, productive assets, and you ignore the debt, which is always dangerous, then you will see companies that are growing through asset accumulation, right? And so I don't quite know how to process this information, but it troubles me because I don't want to live in a world or an economy where everything is the S&P.
So are you completely out of the S&P, Dave?
No. As I said, I don't know where I was at when I talked about energy. So you mentioned Exxon. The other bottom call was that the energy sector of the S&P, now I'm using it, had gone from a few years back of being about 16% of the S&P to 2%. And I don't remember what I said, but that's a bottom call for energy too. So I have bought some energy, but I'm also, on the other hand, profoundly leery of a secular bear market that could be, Japan 1989, US 1967, US 1929, you name them all. I think this is the most overvalued market in history, potentially. Not using just PE.
So what's it going to take, like you said, if we're going to have a situation like in Japan, what would it take for that bubble to pop?
Well, a vibration. Why do volcanoes decide to blow? Why do hurricanes form? Why do earthquakes all of a sudden appear? What sends San Francisco into the ocean? Some sort of vibration.
But would it be slow and steady is my question, or do you think one day we'll wake up and it'll be just a huge crash?
I don't think the huge crash has served the purpose. So I think definition of a correction, and I've used this on several podcasts, is two requirements for a correction. One is significant change in price, and a huge crash in theory could do that. And the second is a fundamental change in investor attitude. So what people can't fathom is that in 1981, guys who were in the equity world were playing solitaire at their desks. They had nothing to do because no one wanted equities. And that's because they had their attitude so mercilessly beaten down. And so by my definition of a correction, March 2020 was nothing. It was actually destructive to an attitude correction. It showed you that your previously developed attitude was not even aggressive enough. I would argue that 2008, 2009 was not a full correction either, not just because I don't think they plumbed low prices, which I don't think they did. They got to about fair value. But within a couple of years, investors were taught just weather the storm. And what I can tell you is if you live through, let's forget Japan, if you live through the US equity market from 67 to 81, you thought you died. I mean, it was just so bad. Inflation adjusted, you lost something like 80% for 14 years. That's an attitude changing thing, but it's not a moment. So in some sense, to change attitude, I think it needs to be a protracted, grinding, painful thing. Because these shots through the shoulder, right? These quick shots that the market takes, people have learned to just say, who cares? And so I think it's going to take a grinding secular bear market of a kind that the average investor doesn't even know that you can go decades without. Again, a stat I might have given you. If you owned the market in 1906. And you inflation adjust your capital gains, forget dividends, but also forget taxes, forget fees, forget other things. But if you own the market in 1906 and that market wobbled around for a number of years after that, the market was inflation adjusted at exactly the same price 75 years later. 75 years later. Part of that shift turns out to be that we've shifted from a dividends-based investing system to a capital gains-based investing system. So all through those 75 years, people got dividends. They're not getting dividends now. So the capital gains are now the addiction.
I want to talk about inflation with you. It's the topic of the summer, really. And I've seen in past interviews, you've spoken about how the risk of hyperinflation is really real here, but the Fed keeps telling us inflation is just transitory. And I've had experts like Gerald Celente come on saying they're lying to us. The numbers are lying to us. How do you see it?
Yeah, they're pathological liars. The Fed's model, here's the stupidity of the Fed. I can't think of enough pejorative terms for the Fed at this point. The Fed says we should aim at 2% inflation to somehow save ourselves from the risk of deflation. Deflation, by the way, is not a bad thing. Deflation is a bad thing only when those punks at the Eccles building have screwed up so badly that the deflation is a catastrophic deflation. And so they don't like those because their game is revealed for all the world to see. But no, they're pathological liars. And so they say, let's aim for 2%. Where'd that number come from? They invented it. They're just lying. They're talking about how it's good for the consumer. It's not. They've actually said it's good for the consumer. It's not. They say it's good for the growth of the economy. It's not. We had the Industrial Revolution with zero inflation, zero net inflation. We had an industrial revolution, better than the one in any other era. And so what's their model? Now they say, now they're reinventing their story. They're like Fauci. They keep changing the rules. Now they're saying we want to average 2%. So let's see what kind of idiots come up with this plan. So let's say that you dip down to 0% inflation. So their model is, therefore, we should let it go to 4. What purpose does that serve? The analogy would be if they said, look, our goal is to drive down the road in our lane. We want to drive down, but we're going to average it. So if we hit the shoulder, we got to spend some time driving over the middle line, just to, on average, drive down the road straight. We go way off the road, we got to shoot across the median, do a head-on with a tractor trailer. It's that level of stupidity, the 2% average inflation. And I don't know, they invent this stuff. And what should insult viewers, in my opinion, is that they think you're that stupid.
But who is it benefiting by them saying that?
They have a problem that is so acute. We have so much leverage in the system. It's possible they're not evil. It's possible they are. I don't know their motivation, but I think they've got a problem that's so acute. What are we growing debt now? And last year was something like 35%. But if you ignore last year, we're still growing at something like 7, 8, 9%. The GDP isn't close to that, which means it's unsustainable. Our unfunded liabilities, according to the last time I talked to Larry Kolikoff, was $235 trillion. That's $2 million per taxpayer. That unfunded liabilities are not just what we owe, but they're what we owe after you account for projected revenues and IOUs that you promised that you still can't pay for. $235 trillion. $2 million per taxpayer. I haven't budgeted $2 million. I bet you haven't budgeted $2 million. But that's what we owe. What happens? Well, someone's going to get screwed. Someone is going to get screwed. It is in all probability going to be the middle class, because you take from the middle class to bribe the poor to give to the rich, right? It's everything's always going from the middle to the periphery.
What's the middle class? It doesn't even exist anymore.
It barely. That's right. And so, maybe doctors, they're upper middle class. Who knows? But somehow the system's really broken. And so I'm despondent. What you're picking up is despondency.
So your talk of the risk of hyperinflation, how real is that for you, and how close is that?
Well, in 2020 convinced me the Fed, who I thought had guardrails. I didn't agree with where they were placed on the road, but I thought had guardrails. I thought there was some point where they say we just can't do that. Have convinced me there's no guardrail. There is nothing they won't do, and therefore they will create a mushroom cloud if they have to. So the risk of hyperinflation is real. Hyperinflation is not high inflation. Hyperinflation, the best definition I've heard is it's a failed state. Okay. So the question is that probable? I don't think it's probable. But you look at what's going on socially in the country, and you have no trouble picturing. I have no trouble picturing a failed state now. I don't think it's probable, but it never in my life. I talked to a distressed asset investor, and he said never in his life has he been nervous about his well-being because of his political views.
You're right. So we toss around these terms like hyperinflation, and I wonder, what does that world look like? So if I'm going to buy milk, how much am I paying for milk in a hyperinflationary world? How much is gas at the pump?
What day is it, right? That's the question. I don't know how. I can't picture it. I know it happens. It happens in various distant lands that don't behave themselves. I don't know. The last hyperinflation that I know of that occurred in a truly industrialized society was the German hyperinflation. I think that's the last big one that was not just some semi-banana republic, and it led to World War II. Now, that correlation I think is a dubious one, but it's I just saw that we bombed Somalia. Now, someone explained to me why we're bombing Somalia. I mean, Somalia is a postage stamp filled with impoverished people. There could be terrorists there. I don't think they got the money to get over here. Why are we bombing Somalia? I lean right. I at one point trusted our foreign policy decisions, but we've been bombing the hell out of everybody. And the only one who didn't is Trump. The one guy who didn't bomb the hell out of everyone hates. And he threw the MOB out there. That was a display of force, nothing more. But some minor skirmishes. But compared to the Bushes, compared to Obama, Yeah, you elect a liberal Democrat. He bombs 7 countries in the Middle East. He wipes out the most stable country of them all, Libya, turns it into a hellhole by taking out Gaddafi. That was the stability of the Middle East, and now it's just garbage, and that's I don't think the military industrial complex, they're out of control. I sound like a flaming liberal from the early 60s bitching about the Vietnam War, citing statistics about how many dead Americans there are. But that's how I feel now. We should stop bombing people. I can't justify letting the chaos in Yemen that we let go on, right? What a horrible situation. We keep giving weapons. We sell weapons to all these countries that kill each other. These are war crimes. These are war crimes. And meanwhile, what's everyone worried about? They're worried about their pronouns. They're worried about garbage, just total garbage. They're worried about Khashoggi. Remember Khashoggi?
You don't have pronouns on your Twitter account.
No, I don't. I'm not gonna. It's gonna be yeehaw if I do. Khashoggi. Remember when that guy got killed? How much time we spent talking about one dead Khashoggi? ODK. One dead Khashoggi got fed to the camels over there, and we have a cow. Well, we've killed millions of people in the Middle East. We have a cow for Khashoggi. Explain that to me. One dead guy.
I want to bring it back to.
This is the failed state model.
Pardon?
This is the failed state model. This gets to hyperinflation, but go ahead, bring it back.
I want to bring it back to how Dave is protecting himself in this world that you've just described. I know in the past you've said you don't have a problem being married to certain investments like gold. You don't trade in and out of it. You don't see it as that type of vehicle. And you said this is the exact reason you didn't invest in Bitcoin, right? Because you would have been out a long time ago. So it's been 6 months, like I said, since we've spoken. Have you done anything differently to your investment portfolio?
I've nibbled at natural resource sort of stuff. So recognizing that they could cut in half. So this is not where I go, they're cheap. So what, they can get twice as cheap. So I feel like karmically, I'm trying to trick the market into finally correcting by getting in, but not enough to be hurt by it. So if the market's going down and you're suffering, you're too long. The market's going up and you're suffering, you're not long enough, right? So I try to invest for sleep. And I got to admit, the last 10 years, I've lost more sleep, the market going up than going down. If everything I've invested since we last talked went to zero, I'd be fine. Because it means that I bought some platinum mining companies. Someone made a great case for platinum mining companies. There's platinum mining companies out there with massive cash flows.
We don't speak enough about platinum, palladium.
And it hasn't spiked. Palladium has gone to the roof. Rhodium's gone to the roof. Platinum's been sitting there going, hey, what about me? So it's the forgotten metal. And I'd love to buy the Sprott platinum ETF, but it's also got palladium.
Okay, so you like platinum plays. I can understand why the industrial components.
Like energy, like all the fossil fuels. It's a bet against alternative energies. I think the alternative energies are a farce.
You've said that you weren't getting into Bitcoin. While we're speaking now, Bitcoin has hugely corrected since the last time we spoke. Now, does it entice you? Would you get in here?
Not yet. I just did a podcast with a couple big time hodlers, right? So I got in a discussion one night, and they said, let's do a podcast. So one's a guy who not only has Bitcoin, but he's also really good at fixed income, a guy named Greg Foss, and another guy named Preston Pish. These are guys with hundreds of thousands of followers. And I actually have only partially listened to it. What could get me into Bitcoin would be a combination of a correction, sort of loss of euphoria, and somehow affiliated with it, the evidence that it's going to survive.
Okay.
And so I want to see, I think before I get into Bitcoin in a meaningful way, I want to see them survive a battle with the sovereigns. Okay. And they haven't yet done that yet, so they're not battle tested. And so they've been tested for their ability to hang on through highs and lows, but they've not gone against the central banks. They've not gone, and I think that day's coming. And if if at the end of that battle they're beaten but not destroyed, then I could say, okay, Bitcoin's real.
Okay, so you want to see how it's going to go up against
And that may take a few
regulation.
years.
Right.
And there's going to be a brawl when they start outlawing it in various, first world countries. When they start making it hard to own in earnest, that's when the battle is on. That's when it's commenced.
Do you care that certain countries in America have already adopted it as their reserve currency? You think it means nothing?
Well, no, it might mean something, but it doesn't. Nor does it. So there's another Bitcoin positive, which I view as a potential negative, and that is you've got this entry of big famous people, and you say, look at that, it's now becoming mainstream. Now I view those people, the laser-eyed huge money guys, as weak hands. So they will bid on NFTs or anything they think is going to go up if it gets to their bottom line, and so they will bid on Bitcoin or Ethereum or whatever's going to work, because they are basically traders on steroids. So when owning Bitcoin becomes unprofitable for any sort of protected period, they will be heading to the hills, in my opinion.
And I know I've asked you this in the past, Dave, because you are a self-professed proud libertarian. And it always kind of surprises me when I meet a libertarian who hasn't embraced Bitcoin, because I would think it's the ultimate symbol of freedom. And like I said, I know we spoke about this in the past, but doesn't it offer that hope of a truly decentralized system, a break from the Federal Reserve and taking power back into your own hands?
Yeah, but it doesn't mean that it's going to work. Right, that's the problem. So the idea of liberating from the Federal Reserve is a real plus, but I also have to be able to say, and I think it's going to work. And I don't forget, right now we've got things like NFT selling for $69 million a piece. We're in a crazy period. So I'm waiting for dust to settle. I don't need 100 bagger on Bitcoin. And people say, oh, that's just stupid. I go, no, I don't. I will retire and live till I'm 100 years old comfortably if I don't screw up. That's my position right now. So the only way I'm in trouble is if I make a big mistake.
Dave, bring it home now for our folks at home. Just, final thoughts, words of advice to navigate these waters right now.
Pet peeves. Final thoughts. We are heading for an authoritarian state. I cannot emphasize that too much. Everything I see going on, that whether it's pushing the vaccine to the nth degree, whether they're rioting in France because they want to mandate passports. Why don't they just say, okay, never mind, take your risk, right? I don't. The vaccine push is way, way, way beyond a health response. And I don't know what it is. I don't know what its role is, but they're jamming it down our throats so hard, they're up to no good. Climate change, same thing is going to happen. Same thing is happening. I personally dug deeply into climate change. I don't believe it. And I'm not alone. You want to know the first thing, when people ask me, why don't you believe climate change? I say, well, what's the first lie? There are many dozens of famous scientists who think it's crap. The first lie you get told is no sane person doesn't believe it. That is a humongous lie. I used to say that, and it's a lie. So they're jamming climate change at us. Why? Right? So I think we're heading for an authoritarian state. Critical race theory. Here I'm going on record. It's garbage. Opposing racism is fine. It's good. It's admirable. Critical race theory is garbage, but they're jamming it at us. Now, fortunately, I think the pushback on that's strong and they're going to get rid of it. They are teaching kindergartners that they're evil because they're white. Do you know anything more racist than that? I don't. It is garbage. And so as I look around me, I see this stuff happening in every nook and cranny. I look at the Biden administration, who I was forgiving to at the end of 2020, at the end of 2019. I'm losing track of the years here. I think they're awful. I think they're truly awful now. And I didn't mind Obama, and I've given credit to Jimmy Carter for being a victim of circumstance. There's very few presidents I think are awful. He was awful. I'll put Woodrow Wilson in there. He was awful. So I just see nothing but trouble socially. And that gets back to the failed state argument. So here's my advice is oppose authoritarianism. When you see someone jamming something down your throat, fight them, speak up. And if you don't, you're a coward. Or you've got a lot to lose, and I'm understanding, right? If I was a 40-year-old professor, I couldn't say that critical race theory is garbage. I can say it now. My big mistake would be to get a lot of guff from Cornell. But Cornell's been pretty good about it.
Well, maybe they'll watch this video, Dave.
Maybe they'll watch this video, and then I'm gonna end up on Tucker Carlson.
All right. Thank you so much, Dave. You're always at Cornell. Go out, get some sun.
I've taken up golf.
Oh, good.
I played serious golf when I was in college, and I gave it up for 45 years. Now I'm out there and smacking away, trying to get my handicap back down into the low end of things.
All right, I'll see you on the green, Dave. Thank you so much for joining me as part of this summer series. So far, it has not been lighthearted content, but it's okay.
No, it's me. I'm trying to bring my darkness to your world here.
Thank you so much, Dave. And thank you all for watching. We'll have much more for you. So be sure to stay tuned to stansberryinvestor.com. That's it for me. I'm Daniela Cambone.